Now it's time to bring in my good friend and co-host, Jeff Small, as well as today's special guest, Jon Najarian. He's an options trader and co-author of the book, Follow the Smart Money. Jon, thanks so much for being back with us here on the Income Generation.
David and Jeff, it's always a pleasure. Thank you.
So we've got some great news today, Jon. Bitcoin is off 50% from its highs, but it's back in the penalty box due to the China smackdown. So tell us what your thoughts are in that regard.
All right, that's pretty easy, Jeff. The problem with China is, of course, they're kicking out all these miners. They're telling their banks not to deal with crypto in any way, shape, or form. And so a lot of those miners, of course, virtually all of them are moving out of China, where they had sweetheart deals with energy right near hydroelectric dams and things like that. Now they've got to raise cash, which means sell Bitcoin. And because they have to pay for the trip, they have to pay to move all those rigs, they have to buy a new place or rent it. I mean, all these things occurring just into this Ethereum expiration, which is this Friday. That's the Ethereum option expiration. I think that was a perfect storm, Jeff, for why Bitcoin traded beneath 29,000 yesterday.
And the average investor gets shellacked. That's just wonderful. So is this a permanent move by China, or is this going to be something they really want to get a hold of and take control of because they see it as a threat to the yuan?
Well, they definitely see it as a threat, Jeff. But if Bitcoin survives this, which I believe it will, it's a decentralized finance or DeFi. And then you've proved out exactly that the most totalitarian regime with the most draconian measures short of death penalty, if they can't stop Bitcoin, then Bitcoin can't be stopped. So this was a big test, obviously, and a lot of FUD, fear, uncertainty, and doubt thrown at the market very fast. That all came to a head at the end of June 2021. And that's, I think, going to be behind us going forward. Really quick, Jon.
So you think these miners will reestablish outside of China versus just closing up shop?
Oh, yeah. I think the answer is that those miners are moving. We know they're moving to Maryland. They're going to go anywhere in the United States or elsewhere where they can get hydroelectric, geothermal, solar, wind, or if they have to, natural gas and coal, because these rigs cost a lot of money. They need cheap electricity. They are coming to the United States. We might be the United States of Bitcoin very soon.
Well, let's just hope that the country with all these draconian measures isn't draconian enough to try to keep these people from leaving the country of China. So, Jon, don't go away. We're going to talk more after the break. And we're also going to be talking about the potential advantages of a digital currency system, as well as some of the potential risks. All this and more coming up on the Income Generation. Welcome back to the Income Generation. I'm David Scranton, and today we're decrypting digital currency just for you. And I'm here with Jeff Small, as well as our special guest, author and options trader, Jon Najarian. Jon, thanks for sticking around.
Thank you. Great to be with you both.
So I guess, Jon, based on everything we've discussed thus far, it's really a great opportunity to buy Bitcoin at this current state of decline that we're in.
I agree with you 100%, Jeff. I did that. I bought more Bitcoin on the drop. I didn't buy the low, but I did buy. I also bought Ethereum on the drop. I think a lot of this is that combination, fear, uncertainty, and doubt, China, as well as this big expiration for Ethereum options. And all of that just puts downward pressure on these cryptocurrencies. You could throw influencers like Elon Musk, who's flipped back and forth, like a windsock on cryptocurrencies in there as well. But I think all that'll be behind us going into the next quarter, Jeff.
So you're not worried about the grumblings we're hearing that the Fed might step in and put some regulations in there?
No, I'm not. They already have plenty of regulations. I think overall, decentralized finance means they don't have to play by the Fed's game. The Fed could basically say, look, you can't trade these assets anymore. They just go through VPNs and do it offshore. Now, obviously, it doesn't grow as fast if you have to go through virtual private networks to do that. But I think decentralized is the key to why Bitcoin is so successful and why most of these people, including Gensler, who taught a course in Bitcoin at MIT, knows you can't really stop decentralized finance.
So here's something I'm really curious about, Jon. How much leverage is there actually? You have any idea in the Bitcoin market? How many people are borrowing to invest into Bitcoin?
You hit the nail on the head. That's the problem. And that's why I focused on the Ethereum expiration of options this Friday, the 25th, because you can get 100-to-1 leverage in a lot of places around the internet, whether it's Deribit or Binance or any of the offshore exchanges, FTX, you can tend to get huge amounts of leverage. And if you could get 100-to-1 leverage in Apple, I would say you'd see Apple swinging around like you're seeing Bitcoin swinging around too. It's leverage. That's one of the issues.
Sure. So I hear you loud and clear, Jon, that it sounds like you're not one of the naysayers who think that it's going to be the next tulip mania where eventually it goes to zero. We all look back and say, what were we thinking? So if it's going to be here to stay, then the question is, where does it fit into the portfolios of members of the income generation? Those of us, all three of us over the age of 50, right? Many of whom are getting close to retirement. How's the best place for them to use it, or is it appropriate for them?
I think it is appropriate. You heard Paul Tudor Jones just say last week that he thought a 5% allocation into cryptocurrencies, I think in particular, he said Bitcoin, was appropriate. I'd say anywhere from 2 to 5%. I would not say more than that. Whenever my particular holdings have performed well, which they haven't, quite frankly, in the last 30 days, but when they've performed well, I've constantly pared them back to bring myself back to a maximum of about 4 or 5% for my holdings. And that's what I'm comfortable with.
So the Paul Tudor Jones camp is really, hey, it's like the new digital gold, 2 to 5%, same thing as you would traditionally with regular gold. But how about for income? You can lend it, you can use it for miners, you can get income. But is that a steady enough income source for retirees on that small portion of their money?
Well, that's one of the great things is those tethered coins like Tether itself pays about 8% on platforms like Voyager, where they'll pay you to deposit your crypto there because then they can lend it out to the market makers. I think things like that or selling futures forward contracts against your Bitcoin lets you make between 14 and 30%, depending how far out and which strikes you pick. I think that's fabulous. So that's what I do with my crypto is I write upside calls against it to get that income.
Got it. All right. Well, so much for the naysayers then. I got it. It's here to stay, but just be careful. A very pungent spice is good in a recipe in small increments, but if you put too much, it ruins the dish. And same thing here. Jon, thanks so much for being back with us. We appreciate it.
Thank you both.